Hello, I'm Henry Becker, Director of Research with Lighthouse Wealth Management. And recently I was traveling abroad with my family, and my three sons asked a good number of questions regarding companies and countries and how global logistics works. And it got me thinking that it might be a good idea to do a video on basically slicing up the global economy and having a look at where things are and how they've changed a little bit. So with that said, let's take a look at a few spreadsheets I put together on my computer. Our first chart here, we have the global economy in 1980 as compared to 2017. And as you can see, developed America, US, Canada, Mexico, has shrunk from 33% in 1980 to 28%. Now, keep in mind, GDP is gross domestic product. This is total output of a nation, or in this case, I did regions. And we can also see that developed Asia has pretty much held steady, but emerging Asia, more or less think China, has grown from 7% to 25%. And these charts probably come as no surprise, as we've seen a lot of growth in China. And the one other thing to note would be emerging Europe has shrunk from 14 to 5%. And this is mostly because some of these countries, emerging Europe, have either moved towards Russia or have become developed pieces of Europe. So there's going to be some change in there just because of the reclassification of some of the countries. Our next chart outlines the share of globally traded stocks. As you might expect, the U.S. has a larger slice in this category than its global economic weight. So developed America at 42%, recall it was 28% of global GDP. And this is mostly driven by technology in North America, i.e. the United States. As well, it doesn't hurt that the U.S. is a solid place to do business and attracts a lot of talent as well. And if we dig yet further, in this chart we have the top 100 companies by size and where they're located. So we have the U.S. sits at, Pac-Man-like U.S. sits at 59.42, let's call it 60%. And then off to the left here we have by each country what the largest company is. So in the US at the time of recording, that's Apple. And then we have in Hong Kong, China, South Korea, again, all technology companies. So what we also see is there are other sprinklings in here of finance, Royal Bank of Canada, BHP Billiton, which is a mining company, Anheuser-Busch is now a Belgian company, and so forth. So again, we can see the U.S. technology is a primary reason why we see the U.S. at such a large portion of the top 100 location. And then our last, this isn't a chart, but just a little spreadsheet I put together to put some things in perspective. So if you look at the total value of global stocks, again, as of the end of August of 2018, we sit at roughly $82.6 trillion. Of that total value, the top 100 largest stocks make up $22.04 trillion, or 26% of the total. And then if we look at the total value of the FANG stocks, this is Facebook, Amazon, Apple, Netflix, Google, $3.4 trillion. That's 4.1% of the total global, or 15% of the top 100. And then further, if we look at the total return of the total world stock index as of 8/31, it was 3.53%. If we looked at the return, the weighted return of those FANG stocks, it's 2.52, or 71% of the global stock market returns for through 8/31/2018. 71% of the total return came from those 5 stocks. And then further, this has been in the news lately, and it kind of goes into what we're talking about here. Total number of U.S. public stocks in 2017, 3,616, which is down 49% from 1996, where we had 7,439 stocks. So what does all this mean? It's a big world with many market-leading companies scattered all around the planet. Now, in the last few years, tech radiating from the United States has led global investor returns. Now, this likely is not going to happen forever, and the reason for that is today's market is not yesterday's market, just as today's market will not be tomorrow's market. Things are changing fast, led by cloud computing and the sharing economy. So while we enjoy the returns we've been getting from the global tech rally that we've seen, mostly led again by the United States, this is not going to last forever. Therefore, we're constantly scanning the globe for opportunities. So, as always, if you have any questions, issues, or concerns, please feel free to reach out to us.